Largest financial fraud in history. $350 trillion in contracts. Your mortgage, your loans, all rigged. Banks admitted it. Paid $9 billion in fines. How many went to jail? 6 people. This is the LIBOR scandal, and you're about to see the receipts. LIBOR, London Interbank Offered Rate, the interest rate behind $350 trillion in global contracts. Every loan, every mortgage, every derivative, all based on one number. 2012. Banks rigged it. For years. Traders in chat rooms. Can you move LIBOR up a bit? Done. Daily fraud. They confessed in court. Barclays, UBS, Deutsche Bank, Citigroup, JPMorgan, RBS, all admitted guilt. $350 trillion. That's 3 times the entire world economy. US GDP today is $29 trillion. Global GDP is $110 trillion. LIBOR contracts in 2012, $350 trillion. Every mortgage in America, every student loan, every credit card, all rigged. And they got away with it. How did we find out? April 2008, Wall Street Journal. Reporter Carrick Mollenkamp notices something impossible. Financial crisis raging. Banks desperate for cash. LIBOR barely moves. That makes no sense. Crisis means banks don't trust each other. LIBOR should spike. It stayed flat. Why? Banks were lying, reporting fake rates to look healthy. High LIBOR rate equals desperate bank equals stock crash. So they lied. But that was just the beginning. 2012. Regulators subpoena bank emails. What they find? Explicit collusion. Real messages from Barclays traders. Jude, I owe you big time. I'm opening a bottle of Bollinger. After manipulating a LIBOR, thanking with $300 champagne. If you know how to keep a secret, I'll bring you a big Starbucks. Bribing the rate submitter with coffee. UBS trader. It's just amazing how LIBOR fixing can make you that much money. They knew it was fraud. They joked about it. They did it anyway. Banks first denied. Rogue traders. Isolated incidents. Then more messages. Different banks. Different traders. Different countries. Different years. Not rogue traders. Institutional policy. June 27, 2012. Barclays settlement. £290 million fine. Bank admits manipulating LIBOR. CEO Bob Diamond resigns. But this was just one bank. Next 5 years, 16 banks investigated. 8 banks settle. $9 billion in fines total. The fraud amount? Unknowable. Estimated $10 to $100 billion stolen. People affected. Everyone with a loan. Every pension. Every city. $350 trillion in contracts. All rigged. How did it work? LIBOR equals the rate banks charge each other for short-term loans. Overnight to 12 months. Calculated daily. Published 11:30 a.m. London time. Benchmark for everything. The calculation. 16 to 18 banks submit rates daily. What would you charge other banks? Top 4 dropped. Bottom 4 dropped. Middle averaged. That's LIBOR. The problem? Self-reported. No verification. No audits. HANA system for trillions of dollars. Asking students to grade their own tests. September 13, 2006. Barclays. Real example from court documents. 8:52 a.m. Trader emails the LIBOR submitter. Can we please have a very high 3-month fix today? 10:47 a.m. Submitter responds. Sure, no problem. Done. 11:30 a.m. LIBOR published. Barclays submitted 5.39%. should be 5.36%. Final LIBOR moves up 0.01%. Result: trader's position makes $250,000 that day. Next day, dude, you're a star. Big help. Real emails, real dates, real fraud. Who paid that $250,000? Everyone with LIBOR-based loans. Millions of people. Few cents each. Adds up to traders' profit. This happened daily. Multiple banks. Multiple traders. Years. Why didn't anyone stop it? Reason 1. Banks knew real rates. Public didn't. No way to verify. Reason 2. Regulators were former bankers. Would return to banking later. Revolving door. Reason 3. Too complex to prosecute. Derivatives intimidate prosecutors. Banks have lawyer armies. Reason 4. Banks fund campaigns. $1.7 billion to politicians 2008 to 2012. $2.5 billion lobbying. Too big to jail. The receipts. Barclays settlement, June 27, 2012. $450 million. Quote, Barclays engaged in misconduct manipulating the LIBOR. Admits wrongdoing. UBS settlement, December 19, 2012. $1.5 billion. Quote, UBS manipulated submissions for benchmark interest rates. Admits manipulation. Royal Bank of Scotland, February 6, 2013. $612 million. Admits collusion. Deutsche Bank, April 23, 2015. $2.5 billion. Admits multi-year fraud. Rabobank, $1 billion. Lloyds, $370 million. Citigroup, $425 million. JPMorgan, $108 million. Total, $9 billion in fines. All admitted guilt in court documents. The chat logs. Barclays 2005. We need a very, very high 3 meters fixing. The higher the better. Barclays 2006. Dude, I owe you big time. Bollinger champagne. UBS 2007. I'll bring you a big Starbucks. UBS 2008. It's just amazing how LIBOR fixing can make you that much money. RBS 2007 to 2009. We've got to push LIBOR higher. Citigroup 2007. We're clean on LIBORs. Why? I told them where they were going. Submitted as evidence. Banks didn't deny authenticity, just said sorry. How widespread? 8 banks settled. 2005 to 2010 minimum. US dollar LIBOR, Euro LIBOR, Yen LIBOR, Pound LIBOR, multiple currencies, multiple years, industry-wide fraud. Contracts affected, $350 trillion. Interest rate swaps, $150 trillion. Futures, $10 trillion. Floating rate notes, $4 trillion, plus mortgages, student loans, business loans. Actual theft, incalculable. Every 0.01% move equals billions. Conservative estimate, $10 to $100 billion stolen. Fines paid, $9 billion. If they stole $10 billion, paid $9 billion in fines, net profit $1 billion, and they probably stole way more. Jail sentences, 6 people globally. Tom Hayes, UBS trader, sentenced 14 years, served 5.5 years, 2024 update, conviction overturned on appeal. Court found his managers knew and approved. The one guy jailed, conviction thrown out, because it was bank policy, not rogue trader. Everyone else kept jobs, kept bonuses, retired rich. Compare, you steal $5,000, 5 to 10 years prison. Banks steal billions, Cost of doing business. Bob Diamond, Barclays CEO. LIBOR rigged under his watch. Forced to resign. Walked away with $30 million severance. No charges. Started new firm. Currently billionaire. The system protects itself. Think this doesn't affect you. Variable rate mortgage based on LIBOR. You paid wrong interest, probably overpaid. Student loans, many tied to LIBOR. You overpaid, no refund. Pension, lost billions on derivatives. Your retirement smaller than it should be. Your city, lost millions on interest rate swaps. Baltimore lost $100 million plus. Detroit lost millions while bankrupt. That's why your taxes went up. Why services got cut. Everyone paid. Banks profited. Why didn't you know? 2012 scandal. Headlines. 2013 to 2016 settlements. Buried. Mainstream media barely covered it. Why? Complicated. Boring. Banks buyouts. Complexity as camouflage. LIBOR manipulation via derivative collusion. Eyes glaze over. By design. Dispersed harm. You lost $50? Didn't notice. Your pension lost $10,000? Invisible. No single victim loses huge amount. No outrage. Perfect crime. Bernie Madoff stole $65 billion. Got 150 years. Clear victims. Rich victims. LIBOR stole $10 to $100 billion. 6 people jailed. Victims equal everyone equals nobody mobilizes. Pattern check. Enron 2001. Rigged energy prices. Caused blackouts. Some executives jailed. Small compared to the LIBOR. 2008 crisis. Fraudulent mortgages. $8 trillion destroyed. 1 banker jailed. Rest got bailouts. The LIBOR. Bigger. More brazen. Less accountability. Pattern. Fraud gets bigger. Penalties get smaller. Jail time disappears. Why? Because it works. Crime pays. If you're a bank. Who was supposed to stop this? Regulators failed. Why? The revolving door. Robert Diamond, Barclays CEO. LIBOR rigged under his watch. After resignation. Started investment firm. Currently billionaire. Timothy Geithner, NY Fed President. Knew about LIBOR concerns in 2008. Did nothing. Became Treasury Secretary. Protected banks. After $1 million plus for Wall Street speeches. Pattern. Work in finance. Regulate softly. Back to finance rich. Regulatory capture. Fox guarding henhouse. When caught. Barclays profit 2011. £5.9 billion. Fine 2012. $450 million. That's 7.6%. Like you earning $100,000, paying $7,600 fine for stealing millions. UBS, still profitable after $1.5 billion fine. Deutsche Bank, fine bigger than 1 year profit, but made $5 to $10 billion annually for decades. Cost of doing business. Fines paid by shareholders. Executives kept bonuses. Nobody personally penalized. Why didn't prosecutors go harder? Campaign contributions 2008 to 2012. $1.7 billion from finance to politicians. Lobbying 2008 to 2012. $2.5 billion. 2,500 lobbyists. 5 lobbyists per member of Congress. March 6, 2013. Attorney General Eric Holder testifies to Senate. Asked, will you prosecute the banks? Holder on the record. I am concerned that the size of some of these institutions becomes so large that it does become difficult for us to prosecute them. If we bring a criminal charge, it will have a negative impact on the national economy, perhaps even the world economy. Translation: banks threatened collapse if prosecuted. Government admitted too big to jail. On camera, under oath, in Congress. Regulatory budget: CFTC had $205 million, 700 staff to regulate $300 trillion market. JPMorgan legal budget: $1 billion per year, outspend regulators 10-1. Game rigged before it starts. Did they fix it? 2014 reform. British Bankers Association removed. New oversight. New rules. Problems. Still self-reported mostly. Still trust-based. SOFR replaced LIBOR. Rolled out 2020 to 2023. But same banks control it. No criminal reform. Manipulation still not clearly illegal many places. Revolving door still spinning. Real reform would need criminal penalties, ban revolving door, fund regulators properly, break up too big to jail banks. None happened. Band-aid on bullet wound. Where are we now? LIBOR retired December 2021 and June 2023, replaced by SOFR. But trillions in legacy contracts still reference LIBOR. Same banks, different benchmark. And they're still doing it. FX rigging 2013 to 2015, settled 2015 to 2021. Same banks, JPMorgan, Citi, Barclays, RBS. Chat rooms called the cartel, $11 billion fines, minimal jail time. Precious metals rigging 2008 to 2016. JPMorgan, $920 million fine. Traders got 2 to 3 years. Treasury manipulation 2015 to 2020. JPMorgan, $920 million fine. No executive jail time. Cryptocurrency manipulation 2023 to 2024. Binance, $4.3 billion settlement November 2023. Fake volumes. Same behavior, new asset class. Wells Fargo, under investigation right now. Interest rate derivatives. SOFR manipulation. Case ongoing. Banks caught. Pay fine. Continue. Get caught again. The behavior hasn't changed. Just the benchmark. You're still at risk. Floating rate debt. Tied to SOFR. Controlled by same banks. Markets. $400 trillion derivatives. $7.5 trillion daily FX. All vulnerable. Pension. Still using derivatives. Still exposed. Pattern recognition. LIBOR rigging 2005 to 2012, 7 years before court. FX rigging 2008 to 2013, 5 years before court. Metals rigging 2008 to 2016, 8 years before court. SOFR started 2020. If pattern holds, next scandal breaks 2026 to 2027. This isn't prediction. This is pattern. The behavior doesn't change, just the names. So that's the LIBOR. Largest financial fraud in history. $350 trillion affected. Banks rigged the most important number in finance, daily, for years. They admitted it in court, paid $9 billion. 6 people jailed. Everyone else kept jobs, money, freedom. Victims never got money back. This is about a system where banks commit fraud affecting trillions, admit it, pay less than profits, nobody goes to jail. Where regulators are captured, politicians are bought, media won't cover it, complexity protects criminals. Different rules for them. You steal $5,000, prison. Banks steal billions, cost of doing business. System working as designed. This affects your life right now. Your mortgage, rigged. Your loans, rigged. Your pension, billions lost. Your city services, cut. Your taxes, Higher. Still happening. Different benchmarks. Same banks. Same behavior. Nothing fundamentally changed. It will happen again. It is happening again. You just don't know it yet. Now you know. You know how they rigged the LIBOR. You know they confessed. You know they got away with it. You know it still happens. You can't unsee this. Next time you hear bank settlement. Next time, market manipulation. Next time, no wrongdoing admitted. You'll know what that means. The game is rigged. The receipts are public. They're counting on you not caring or not understanding. Now you understand. Want the actual documents? Links in description. Barclays FSA Final Notice 2012. UBS DOJ Settlement 2012. Tom Hayes Appeal 2024. Eric Holder Senate Testimony 2013. Read them yourself. Don't trust me. Trust the evidence. Public record. They want you not to read it. What's coming next on this channel? Next video, the $600 trillion derivatives bomb. Banks created a ticking time bomb. Bigger than LIBOR. Court documents show they know it's unstable. When it blows, global collapse. After that, Congress insider trading. Nancy Pelosi, $100 million plus in 10 years on $200,000 salary. Paul Pelosi's lucky picks. Legal under loopholes. I have the records. Every week, financial scandals with receipts, court documents, chat logs, settlement records. No theories, only proof. The system is rigged. I'm showing you how. Subscribe so you don't miss it.